And like every month, let's review my portfolio to see the new position I have, also the position that I have in my watch list that I would like potentially to add in my portfolio. Again, I still have those two portfolios. As you can see, compared to last month, I sold two companies from my dividend portfolio and put the cash in this account. This cash is still not allocated yet because I'm still searching for some good opportunities to allocate it, to keep a good balance between each company in my portfolio. So let's see now the performance of my portfolio for the last months, and we were doing very well till this moment, till July 29, where it started to totally drop. It dropped by, we were plus 3.8%, and it dropped by 6% almost in one day. Then recovered a little, but yet the S&P 500 performed way better during this period from my portfolio. The reason is simple, it's Novo Nordisk. Okay, we had Novo Nordisk that totally blew up, minus 30% in 1 month. So obviously, it kind of totally destroyed a performance. And to be honest, it destroyed as well the year-to-date performance. We were doing very well. Right before this, when we look at the performance annually, right before this, we were 2% higher than the S&P 500. And then with the NVO, not earning release, but the news that they got, you have a full video about it on the YouTube channel, plus the earning from Amazon, which is my biggest position, it put us down, a little down compared to the S&P 500, but there is always months like this. It's normal. We cannot outperform every month. I don't expect to outperform every month. I don't even expect to outperform every year. I just expect that if we come back in 10 years, my performance will have been better. So let's have a look at the positions that I have in my portfolio. We have now Google that have become the main position. I didn't increase my position in it, okay? It's just that Amazon dropped by 10%. So I have Amazon, which is pretty flat here, but Alphabet that increased and now it's up 20%. So that's why it became my main position. But if you put on cost, Google is slightly less big than Amazon. Evolution is still my third position in market value. Same third position. We have Lam Research also, which start to be a bigger position because I have a good P&L, plus 45%. I bought it like 3 months ago, something like this. So it's doing well. We have Brookfield as well that start to go a bit up, now plus 11%. And the new position is Landbridge. I had a two-time position, one first at $65.50 and the second one at $53. So the one at $53 now is up 8%, and this one is down 11%, something like this. The reason I bought it is because I really believe that they are not deeply undervalued, but they are at a fair value considering the business model that they have, the potential growth that they can have, the position also that they have. I think that this there was panic with this Gotham Fund report, which is bearish on Landbridge and basically saying that it's worth nothing. But most of the arguments that they have, we can kind of counter them, and they are based on not real things, or they extrapolate some stuff. So I basically think it was a good opportunity to enter in the company. I have an average cost of $61. So I think, in my opinion, everything which is under $65 is good for Landbridge. It's a good price to pay for Landbridge. So I made it approximately 6% of my portfolio, 7% of my portfolio, and if we combine it as well with the cash and the dividend portfolio that I have, it's 4.5%, something like this, of my portfolio. So I'm comfortable with having 5%. It's a new company, okay? It's a company that has been listed only since a year on the market, so it's very recent. I don't expect it to be a big member of my portfolio because I don't want to allocate too much capital to this kind of company. I prefer to allocate capital to companies that have been doing great for decades. But I think it can be a good opportunity, a good, let's say, risky bet. Okay, more volatile, more risky, but have a bigger upward. And I think by buying it under $65, I really think that the risk reward is really well positioned. Okay. That's all for Landbridge. I did a deep dive on it. You can find it in the link in my on my profile. You will find a deep dive on Landbridge. On the other side of the company, we have Amazon that decreased 10% after earnings. The reason is pretty much because of cloud, because Google, Alphabet and Microsoft had amazing quarter for cloud. Amazon, a bit less good. It wasn't a bad quarter, it was just a less good quarter. The backlog still grew by 25% year over year, but the operating margin declined and the growth was less than competitors. So that's why the market was a bit worried for this company. The management were not reassuring investors during the conference call. So I believe that now Amazon can be at a good valuation. Okay, if we take the operating cash flow, if we believe that they will grow by 15% per year for the next 5 years, they will issue still 1% share every year, and with a price to operating cash flow around 19 in 5 years, we have a fair value of $225. We are now at $211. So I believe that now can be a good price to start a position on Amazon if you don't have, or if you already have a position, to maybe increase a bit your stack in the company. The second one that had a very bad performance is Novo Nordisk. They are having their earning report very soon. So it will be interesting to see what we'll see, potentially less growth than expected, as I already said, because they put the guidance down. That's the main reason, putting the guidance down because of compounding. I made a full video on it, so you can have a look at it. In terms of valuation, if we take now a net income growth of 8%, okay, before we were more around 12-13%, what I was taking, now I'm taking 8%, so very conservative. 1% share out at buybacks, 10% dividend growth, a P ratio of 18, which is under the median over the last 10 years. Okay, we have a fair value of $64. We're actually at 48, so we're deeply undervalued for this company. I believe we're deeply undervalued. Why I'm not buying again Novo? Because it's already 11% of my portfolio. Okay, I allocated 11. And if we combine all my portfolio and the cash that I have available to buy companies, it's approximately 7-8%. So I don't want to have a bigger position than 7-8% on Novo. I think it's way more than enough. So I'm not buying the dip. You could buy the dip, to be honest. I don't see any red flag. I mean, I see orange flag. I see things that you need to be careful. But if you understand the business, if you're okay to invest into pharmaceuticals, you might have something to play here. Obviously, you have some competition. Lilly is well positioned. For now, Lilly, in terms of operation and pattern, they are very good. Okay, the pipeline is very good. Lilly are doing great, but Lilly is extremely overvalued. While Novo is the opposite, is extremely undervalued. So I believe that you can have a great opportunity with Novo. Even though, in my opinion, for now, with what I have, Lilly is slightly better. Eli and Lilly, let's be honest, is slightly better in terms of operation, in terms of product, but it can change fast. It can really change fast, and the momentum for Novo Nordisk can change fast. Lastly, I would like to talk about Fiserv pretty quick. It's a company that I've been following now since a few weeks because the price really drops lately. Okay, if we see on a 1 year base, it dropped by more than 12%. The last 3 months, it dropped by 26%. So it starts to be potentially a good opportunity for companies that manage to grow the EPS by 14% per year for the last 10 years. So it's good. The free cash flow by 19% per year for the last 10 years. It's a company that have a bit of debt. That's something that annoys me. And the second thing that annoys me is the return on capital invested and return on capital employed, which is a bit low. So we could look potentially at the return on to use free cash flow instead of net income for this, but yet it's still under 15%, and historically it hasn't been much over 15%. Okay, if we look at the return on capital employed, if we look at the history for the last 20 years, it was over 15% only from 2014 to 2018. And they did an acquisition, so it went down and now going up again. I don't know if they will manage to put it over 15% again, but it's something that can annoy me. Before it was same, and they did an acquisition, and it's always the same model. They do an acquisition and then it improves. That's why it outperformed the market for the last 20 years and so on, but that's my two concerns. The debt, okay, the debt level, and this, especially that the debt is going higher. Okay, you have a full video about it. I did a deep dive on Fiserv, you can find it again on my profile. But when we look in terms of valuation, if we have a free cash flow growth of 10% per year, they do 2% buyback per year, and a price to free cash flow of 18 in 5 years, we can expect 16% per year performance. The fair value is 159, we're at 136. So it might be a great opportunity. I think it represents 5% of François Rocham's portfolio, so this can be interesting. When we look at the price to free cash flow for this company, we are now at 12. So 12 is really low, okay? We're now at 12, and if we look at the history, last time we were at this kind of price to free cash flow was in 2011, okay? And they were recovering from the big subprime crisis in 2007, 2008. The median is 20. So by taking a median in my valuation, by aiming for 18, I think it's pretty safe. Aiming for 10% growth, I think it's always as well pretty safe. So yeah, I have a fair value of $162 approximately. $160, so we will see. I might start a position on it, but I'm really still thinking about it because this debt level really annoys me. So I'm still thinking if it's a red flag for me or if it's just an orange flag. I need to study a bit more the business. I need especially to look at the, where is it? I need to go and look at what happened during those period when they were doing new acquisition to see how they integrated the acquisition, because you can see that it went down here. So I need to have a look at the earning calls from this two moment, so in 2016, and as well from the 90s when they did also some acquisition. I have to look at the report to understand how they work with this, how they see the return on capital and the strategy for this, because for now I'm not 100% confident for this. It's a great business. It seems that the management is very competent. This, I have nothing bad to say about it. It's just that I want to take precaution with these debt levels and the return on capital. So that's all for this video. I will see you in another video and next month for my portfolio review. Bye.